and I think now we've probably lost a lot of that skill. But I think there's no equivalent in New South Wales, and often those options aren't put up to government to some extent. I mean, Treasury will argue they are, but I think in terms of the skill base that Victoria's got, it's probably exceptional, and it probably stands out as leading the pack in Australia, I suspect.
If I can hazard a comment on that, observing projects in a number of states, my overall impression comparing Victoria is that that by and large, the question doesn't get asked as it does in other places. Why would I risk doing that? Why would I risk changing the way we've done it before? And that question, by and large, doesn't get asked in Victoria, but probably based on the experience of a number of successful projects across a number of agencies. Any more questions?
John Clark from ANZ Infrastructure Services. John, just a comment on your government support for the funding of the desal plant in Victoria. Bill Banks of Ernst & Young and myself made a submission to Minister Albanese's office a couple of months ago based on the idea that once the disciplines and the returns of the private sector have been defined in a PPP project, there was a shortfall of both debt or equity because of the capital constraints in the economy, that the government should step in on a transitional arrangement, pari passu with the private sector, and ensure that the appropriate funding is in place. So just a comment from me, I congratulate you on putting that mechanism in place because I think it's an appropriate transitional arrangement. Really, the federal government's looking on the private sector for a lot of partnership money and the development of a level of infrastructure spending which a couple of years ago was not even discussed. It's against the background also of CPRS on the energy market, where over the next 5 to 10 years, over $50 billion worth of investment in energy infrastructure, and possibly more if you believe the Chief Executive of AGL, is required, together with the refinance of a whole lot of other debt as well. And Stephen Allen this morning said he was worried about deleveraging of banks. The bond markets are closed, and really it was the bond market that took, the international bond markets that took a significant amount of, funded a significant amount of the current account deficit and therefore the expansion of the Australian economy. To you, David, a question. When you look out at where we are and all of the funding requirements for infrastructure, including energy and the like, are we dreaming that we'll be able to actually invest at the level everyone is expected to?
Well, yeah, it's a really hard one to say, John, in truth. I mean, I think, the markets generally always surprise either way. They go down faster than we think and they go up faster than we think. I think it requires, I think it's going to take a bit of digestive time still, but I do think that we are starting to see now pretty good evidence that there is a lot of money out there. That money is priced a lot higher than it used to be, but there is quite a lot of evidence that there is money out there, and I'm a firm believer that money will find its way into the system at the right pricing as it's required. So, cautiously, as Steve said, cautiously optimistic, but I do think that as long as there are sensible decisions being made, that funding will be able to be provided for all of these things and will work itself out over the next 12, 18 months.
Question at the
back. Hi, Brett Skinner from Transurban. I'm just interested on the theme of the service approach that, Paul, you mentioned and John, you mentioned earlier, and whether you think that the climate's mature enough for us to do a transfer from the social infrastructure to the economic infrastructure, and particularly just reflecting on the presentations this morning about whether the service, for example, toll roads, is ready for that sort of approach where the time people take to travel or the amount of vehicles that travel on a lane at a particular time is a service level that might want to be put to the market. And are we ready to do that? I suppose politically, is it available? But secondly, David, do you think the market financially would be able to handle that sort of a dynamic? We talk about the difficulties of traffic forecasting at the moment as it is at a fixed toll rate. if we started bringing in a flexible toll system like we talked about with hot lanes in America, is the finance market up for that?
Yeah, happy to. I mean, from a government's perspective, we looked at some of those things in respect to toll roads, I guess, when we were looking at the procurement options for Eastlink. So it goes back, and we did some market testing then. We looked at what was happening overseas in respect to some of those service outcomes. We did some market testing, talked to participants here. I think the market was ready for it then. And in fact, I mean, a number of those sort of KPIs do exist in the Eastlink contract. Yeah, so I think we can drive. The thing with roads, well, transport, economic assets and transport assets in particular, it's the price setting that we have to get right. And you know, I'd encourage people, you know, Ken Henry's looking at the pricing of assets, of transport services in the tax review. So, you know, I'm sure there are people here that are getting involved in that work or preparing for representations, etc., of the Commonwealth Treasury. But I'd encourage you to do it, because I think there are, you know, it's very complex, because, you know, if you get sort of user pay pricing pressure, you know, parameters coming into toll roads, etc., then you've got to deal with all, you know, all the taxes somehow that already exist through, you know, petrol pricing and registrations and everything else we already have. So there's a whole heap of unwinding. It's a very complex issue, but now's the time to actually confront some of those things. And I think if we could get more direct, if we could give consumers more decision over how they spend their transport dollar, that's when we will actually really leverage some of these sort of service delivery outcomes. But that's going to take some time, and it looks as though we might have an opportunity to head down that path.
Yeah, I think it certainly raises its challenges. I mean, we're starting to move that way a little bit in the Australian toll roads with differential tolling during the day. Now, so you can actually try and regulate usage and encourage usage in off-peak times and so forth by and change travel patterns to increase the service provision of the road. People find it, I think the private sector will find it easier to get their heads around that sort of thing than a sort of structure whereby you just say to the private sector, you run the road, you provide a level of service, you can sort of have the toll flexible and try and make the service work or things like that, because that then becomes very political with the decisions that the private sector make impacting on the government. So I think it's sort of like a hybrid. I think yes, but I think it's almost better for tolling to be adjusted in terms of time of day tolling and things like that, sort of in a contract up front as the way of actually providing a higher level of service to the user than leaving it in the hands of the private sector totally, because what we always find with these things, at the end of the day, the community use the road. And if the government doesn't like the way that private sector is making their decisions on something which they've been given the power to make decisions on, it'll come back to haunt the private sector anyhow. So I think there is a model there, but it's sort of one step at a time.
I think it's very early days yet in this model, and I think there's an enormous amount of scope for service improvement. It's, I think, important that when the bids are assessed, that the experience of the service delivery agent is taken into account, and that we sort of discount, if you like, the bids from people who can demonstrate very little experience in running these projects. I think that's where we do come into some problems, because it is a long-term contract. It's there to provide a service for 30 plus years, and we need a service provider who's going to be there for the long haul. So I think that's really important. Clearly, a lot of those projects were priced such that, in terms of the toll levels, such that the financial cost and the returns could be recouped over the concession period and a reasonable profit made.